Mutual fund distributors have traditionally guided the bulk of investors in this space. However, over the past few years, we all know that direct mutual fund platforms have come up in a very, very big way. Talk about MF Central, for example, which is the latest entrant. In this scenario, the question that we're going to ask in the next conversation is, what is the role of distributors and investment advisors in 2022? Now, we're setting the stage, and just a few seconds before I invite the panel on stage, I want to quickly remind you of what else is lined up today. Of course, post-lunch, we're going to walk into, we're going to meet with 4 incredible startups in the personal finance space and understand what's new on that front. We're also going to witness the big debate on market kya lagta hai. Usually we're going to take that offline conversation to the stage. We're also going to dive into how mutual funds are serving the one of the youngest populations in the world. We're also going to talk about the regulatory aspects of mutual funds in our country. And of course, we're going to close with the investment masterclass later today. So stay tuned, stay glued to those chairs. Are we good to go, team? Are we ready? Okay, almost there. Some last minute touches. And hopefully we'll reserve some time for a quick Q&A with this panel, so please keep your questions handy. And on that note, please put your hands together for our speakers on this panel, founder and CEO, Sapient Wealth Advisors and Brokers Private Limited, Amit Bivalkar. Founder and Director, Association of Registered Investment Advisors and co-founder, Fino Scholars, Renu Maheshwari. Executive Director and Chief of Strategy, SBI Mutual Fund, Srinivas Jain. Managing Director, CAMS, Anuj Kumar. CBO, Axis AMC, Raghav Iyengar. And moderating this discussion is Senior Content Creator, Mint, Satya Sontanam. Can we have a bigger round of applause? Come on, let's give some energy to this panel. And Satya, over to you.
Thank you. Thank you, panel, for joining us today. So, in 2019, when Mint had its mutual fund conclave 3 years back, so this is sort of the topic of discussion, which is MF intermediation. So at that point of time, the topic of discussion was how the total expense ratio has come down, and how the upfront commission has been prohibited, and how the trail commission has been introduced for the distributors, and what is the impact on the distribution business, and how the fintech players have been helping retail investors in accessing the direct plans. I think we have come a long way since then. But if you see, the AUM of the whole mutual fund industry has gone to about 38 lakh crore, but the share of the direct plans has been at the same level at 45%. Amit, I would want to start with you. Why do you think is the reason, why is the share of the direct plans, despite increase in the number of fintech players offering the services, have been improved?
Yeah, thank you, Mint, and good afternoon, everyone. I don't think so we should look at it that way. Last 2 years during COVID, everybody was so fascinated by the stock market that hardly people came to mutual funds and direct plans. So because everywhere you put a finger on a stock and the stock went up 20%. Online and digital, we need to make a difference here. Enabling of transaction and handholding a customer, these are 2 different things we should keep in mind. When we talk of personal finance, we should always think that personal finance cannot happen without a person. So when you go to direct plans or when you go through a fintech website, you will do it till a certain amount of corpus is generated. Post that, you will require an advisor or you will require a distributor. Today, if I ask you if you have 1 crore of rupees, will you go on a fintech platform and invest? The answer is no. If you want to sell a 5 crore house, will you go on a nobroker.com and sell, or would you go to a good brokerage house in real estate? And so I think intermediation, be it advisory or be it distribution, is very much important. Advent of direct plans gave you an option for evolved investors to go and buy directly. It is not a competition to distribution or intermediation. Everything which is getting cheap, I think is only financial services. Rest all is getting costlier, right? Only financial services are getting cheap. So this is the option which you have to go and invest if you are aware. If you just look at the discount percentage in fees and you want to go and invest, I don't think so that's the right way to look at it. Another thing is, because of the stock market boom in the last 2 years, people have gone, small case was one example where many retail guys actually went into stocks through the small case route. Then you have all the broking platforms which became discount brokers. So you have seen a less number of participation on the direct plans in the retail space here. But on the corporate side and the family office side, we have seen a lot of new accounts getting added onto the direct route in mutual funds as well. So there is a dichotomy there that retail want to come direct for saving of fees, while family offices are saying, I will go direct, but I'll pay a fee. So you have both sides of the argument.
True, true. Yeah. I'm sure Anuj must be having a point here. Is there any impact of institutional investors going through the advisory route?
No, sure. So I think what Amit has given is a very nice picture of what's happened in the last 2 to 3 years. But let me just basis data present the flip side too, which is what is looking good. And why the 45% of direct investment share in 38 lakh crore is perhaps a slightly warped metric. And we have to scratch the surface and go one level lower. So the first good news that we see at the aggregate data level is that after a long time, the individual investors now over 50%, it's actually 56% of our market. It was an institutional market for many, many decades. And today, 56% of this 38 lakh crore which is being referenced is the individual investor, which is great news because a lot of that, you can say, has been brought in by intermediation. 80% of this 56, so this 56 amounts to about 21 lakh crore, 80% of this is intermediated. There is either an ARN or an RIA behind that. So that's about 17 lakh crore. And what is the good news? This number has almost doubled in the last 3.5 years. Now you can argue some of those are mark-to-market gains, some of those are net selling gains, but it's not a bad metric to see that in about 3 years and some months, that number has almost doubled. When you see B30, which is a true, I would say, true demonstration of the breadth of distribution, that retail investor AUM has doubled even in a faster period, in about 2.5 years, from 2.5 to about 4.5 lakh crore. So those are the good things. If we take the platforms, specifically the RIA platforms, I think splendid job. Just look at some of the numbers. AUM was about 35,000 crore in 2019, 1.3 lakh crore now. So almost 4x in 3 years. But I think the biggest number that we see, last year our industry got about 2.4 crore SIPs. Almost 80 lakh came through the RIA platform route. But almost 85% came through the intermediated route. So while we know that there are a lot of corrections to be made, selling has to become deeper, wider, the number of intermediaries doesn't seem to be expanding. We still have 50% investors who are a single mutual fund investor. Within that, they haven't yet bought the best mutual fund scheme. So you have an investor who's only consumed a single mutual fund in many years, but he doesn't have a best scheme, he has a second or third best scheme. So those are things to be corrected, but I just thought, just to get the impression right, some of the headlines are not looking bad at all.
Sure, sure. Those are some interesting numbers. Talking about RIAs, Renu, you must have dealt with a lot of investors coming to you for financial advice. But I'm sure that when they come to you, they must be holding some mutual funds already in their portfolio, which are bought on recommendation by a friend, relative, or distributor, or anybody else. So what is that one observation that you've seen from their portfolios? Is it that they're buying only the flagship schemes, or just based on the recent performance of the fund? And how do you go about rejigging their portfolio?
So thank you very much for having me here, first of all. Second is, I'll pick where Anuj stopped, that look at the data points, So most of the numbers are coming from ARN or RIA, and we would like to, being an RIA, we would like RIA to go up. But look at that aspect of what you are saying, that, mutual fund, people coming back with some bit of a mutual fund, some investment. it has got no alignment with their financial goals. They just buy it because someone said it's going to give you a lot of returns. You'll be surprised that people don't even know that mutual fund actually doesn't mean equity. People just assume mutual fund means, and then when you ask them which mutual fund, Franklin Templeton or SBI, they have no idea that, that the underlying asset makes all the difference. There's a lot of financial illiteracy in the community, in our society, and that's where intermediation is going to play the biggest role possible in taking these products, what we call some bit not so simple like a fixed deposit, to the people and the masses in the country. We believe that RIAs are the ones who will be able to provide a good investor experience, what we call a good investment experience to an investor, because when the markets went down, for example, in March 20, during COVID, we would like to have the data, and that's what we are talking to Anuj and CAMS as well. But what happened? How did people react? How much of the money went out from the investors who were being advised, and how much of the money went out, how many of them stayed put and invested more? I'm sure the numbers will be startling, because that emotional counseling, that some bit of understanding about how the markets work and when should you be guided by greed and when you should be guided by fear and not by the two of them, will make all the difference in investment experience. And we believe at ARIA that that's how the future industry will grow, with good investment experience.
I'm sure. While working on some of the stories,
Can I just add something? You have to just realize that in a distribution or advisory setup, सच्चा बोलने वाला आदमी चाहिए कि अच्छा बोलने वाला आदमी चाहिए? जो सच्चा बोलता है उसके पास जाना चाहिए, whether it is direct or distribution doesn't make a difference. So we generally talk अच्छा कि ये return है, ये ऐसा है, वैसा है. सच्चा बोलने वाला जो advisor होगा, that will solve this problem.
I understand. That's what I'm saying. For our stories also, whenever we talk to distributors and RIAs and their clients, so the clients keep saying that more than financial advisors, they are like personal friends to us. So we keep sharing our life decisions, on how to go about it, not just the financial decisions, but also on personally to that level. I'm sure that connection is there. Srinivas, I want to bring you in here. Thanks to the State Bank of India's wide, bank branch network, SBI Mutual Fund has access to wide distribution network. I want to understand what is the role of mutual fund here? I mean, how do you make sure that with that wide branch network selling the mutual fund products, how do you make sure that they are missold to the investors?
Yeah, thank you. Thank you for the lovely question, and good to be back after a hiatus of 2 years in the Conclave. So we both have the privilege of the network and also the bane of managing it, right? So mis-selling is not something that's new, that's been around for a while. I think the good news here is over a period of time, education levels have gone up of the investor. We've built high quality tools. We've built capabilities for onboarding with all the risk matrices, not necessarily asset manager, the distribution community, the banks at the last mile. But the proof of the pudding is the number of complaints. Right. I am very happy to say over the last few years, these mis-selling complaints have dramatically come down. I would say dramatically. It's in very, very big numbers have come down. Clearly, because the action that happens in the last mile in terms of educated counselors available at the bank or every distribution channel, and secondly, educated investors who are coming in. What we've also been able to do is build tools, knowledge bank, which makes the last mile easy for them to actually guide the investors. So it's an interesting debate we are having. There are 3 generations of customers, right? You have a self-directed kind of people who do all their study with Mint and every other publication that they can get online. And there are people who actually want guidance, who go to RIAs and MFDs. And of course, there are institutional investors who are saying, I kind of understand, but help me build better asset allocation, help me build those things. For all of them, there has to be a different set of guidance that needs to be given. Largely, the MFD community is now very well aware of what kind of product that needs to be pushed or at least suggested to what kind of customers. Even though MFDs are not actively involved in asset allocation, they are supposed to, there are some fiduciary requirement, but their awareness level is very high. But the bigger thing is asset management companies have been able to build knowledge banks, training programs. We have a lot of these soft skill programs that we do. We actually have a digital academy called SBI Academy, which actually helps people train on these things.
Sure.
So these are all been very helpful.
Understand.
I think Renu, the other thing that I like to talk about, and I think Renu touched upon it, is that investors are now reasonably self-aware also. Even though they don't know their scheme and stuff like that. I think today, thanks to these small lovely instruments we have, I think it's your instrument on the go. There's a lot of content available. You guys are doing a great job in sort of educating investors. So I think that also makes our life easier as manufacturers.
Understand.
So the customer in some sense is a bit aware. And then of course the last bit, which is in some sense I call it the personalization, which is where a MFD or RI comes in, because each customer is unique. I think that sort of completes the circle and makes sure that complaints are really down right now. So that's a good thing for all of us.
Understand. You want to add anything?
Also, I think one of the big trends that we've seen in the last couple of years is products have also started getting a little more embedded, right? So we have the range that's available with you, SEBI approved range. But we have also got solution-oriented products, which are kind of helping you build one or two solutions, which are simple to buy, rather than buying 5 funds or 10 funds. So to an extent, these kind of, both product innovation, knowledge innovations have actually made some of these mis-selling issues quite a thing of the past.
Understand, yeah. Talking about manufacturing of mutual fund products by the mutual fund houses, what is the role of mutual fund house here? Say suppose when the valuations are too high, or when the size of the fund becomes too big to manage. I know a lot of mutual funds are already doing it, but or more and more mutual funds have to take up this and limit the flows when they think that the fund size has increased to a large size that it cannot be managed efficiently.
Me? Okay.
Yeah.
So, yeah, but if you're directing to us because we manage some few 50,000 crore plus funds, it's true. The fact is that I don't think all asset managers today are finally benchmarked to the ultimate performance, right? If you do not have a good performance, then it doesn't matter what is the size of the funds that you manage. One of the good realization that's happened over a period of time is fund managers, like we have a fund where we've kept subscriptions clearly because the investment opportunity is limited there. And as the investment opportunity opens up, we will open up for subscription. So we've been kind of true to the capabilities of the funds and the limitation of the funds that has. Similarly, there have been times in the past where we've realized that asset allocation is critical, but asset allocation is very tough at the retail investor level, so why not build products which can auto-balance itself? So we have an asset allocation committee at the fund house, which kind of runs these numbers, and we have about 5 or 6 products which kind of use these numbers in terms of understanding at what level markets are from a pure equity, fixed income, or multi-asset kind of an exposure. So over a period of time, these kind of products are also becoming relevant. Having said that, we are not here to build a product which is always timing the market right. We are here to build a product which can help both retail investors, but I think the big set of, what I say, heavy lifting has to be done by RIA community, MFD community, who are supposed to advise our customers whether they've got their asset allocation right, market timing right, or things like that.
Raghav, do you agree with him?
Absolutely. I think the call on limiting flow is not actually driven by, it's driven by the fund manager based on what he thinks will be the future performance of the scheme. So I think we've had a couple of instances where we've cut back flows in something. And yes, of course, this whole asset allocation category is brilliant. I think it's a great way to get a first-time investor into the system. And then eventually that gets handheld and gets into an MFD or an RI. Because those are very basic level products. And I think the future of intermediation to my mind is personalization. And that is something a manufacturer can never do. Right? Our job is to sort of come up with and of course what we can do is maybe recommend a set of things that we feel will do well over a period of time. But the personalization bit is actually on the left-hand side. It's not with us.
Sure. So we got a distributor's view, RIA's view, mutual funds view, fund houses view. Now, Anuj, about the RTA. So when MF Central was introduced by SEBI, so there was a lot of debate on whether it is required when MF utility is already there. But this integrated platform is very important as the mutual fund industry is growing. It's been 1 year. Could you give us some stats on the number of investors that have been registered with your platform, and what are the number of downloads, how people are using it, and what are the key problems that you're seeing from the RTA side, that mutual fund investors are facing?
So if you look at MF Central, we had formally launched it in September last year. Why is it a unique platform? Why did we need it? Why is it different or unique and has its own place? Is the only platform which I would say is completely real-time, built as a very thin veneer over the RTA systems. As you know, the mutual fund industry typically for many decades has operated in the batch mode. You keep collecting transactions, you keep collecting monies, you wait for a cutoff time, and then after the cutoff time, you act. Here, because everything is API based in real time, any transaction which commences will come and hit the RTA systems directly. There is no batching being done by anyone in between. There is no extra loop for the money to be collected in one account, which of course now, all of you know, has got sunset because of the no pooling circular. But even otherwise, there is no extra hop for either the money or the transaction to happen. MF Central has now integrated. So if you have a download and if you want to look at your phones, this is the first time you can see all your holdings, which means you can see your holdings in the SOA mode, you can see DMAT holdings, you can see ETFs, all in the same statement. We are now enabling the entire ecosystem-based APIs. So all the platforms, so far you knew that the unwritten rule in the industry was that as an intermediary or a broker or an advisor, you could only show on your property those transactions that the consumer has done with you. So if the consumer had done 100 transactions, but 10 were done with you, you could show them 10. That's going away now, which means basis the consumer's consent, you will be, any platform will be able to download all the 100 transactions and show him a statement. 17 or 18 out of the non-financial transactions, you know that was a bit of a clutter in the industry. They were all signature, paper-based. I think apart from change of signature and one more, you can actually do everything online basis an OTP. And if you don't have the same phone number across all your folios, obviously from a risk perspective, we won't show you where you don't have. But there is a bit of a guidance in terms of how you can go and plant the same phone number in the other folios too that you may have with the mutual funds. One thing that we've seen is that because consumers, for example, nominee insertion, you know, we have mutual funds sitting here, and for decades we've been trying as an industry to get nominations in. It just drives down any claimant-related problem that happens and shrinks the unclaimed amounts. But we were not very successful because it meant a physical trip to one of the RTA offices, the MC offices. We're seeing very big traffic in nominee insertion, and that is when we only have 3 lakh registered users, which means out of the 3.5 crore in the industry, about 1% have joined up in the first year. But our expectation is that this number will significantly grow and present the next level of convenience. So today, I mean, you asked for the numbers, let me give those to you. About 85,000 app downloads, 3 lakh registered users, about 1,000 transactions emanating today, non-financial transactions, but that number is slated to grow, and about 10,000 login sessions. Sure. Now, our expectation is that a good number is at least 20 to 30 times bigger than this, but as we mobilize the forces and as the APIs become more popular, which means you can actually do this from some other platform, you don't have to come to MF Central. I think as an industry, and Srinivas made that very interesting point, that we are probably slightly self-deprecating. If you see the element of automation that exists in our industry, and if you see adjacencies in banking and insurance, we've done much better. We give integrated pictures of all your holdings. We give lifetime statements without making you wait instantly. We give you unlimited service without any charges. You're just paying the TER on the plan. A lot of banks are going to charge you for a lot of things that you seek from them. We charge you for nothing. And then for these integrated platforms, it's almost instant service today. These integrated platforms, it's almost instant service today. Srinivas talked about complaints from mis-selling, but if you see aggregate complaints in 3.5 crore investors, the count is probably 25, 30,000 a year. It's a minuscule number. So I would say that's all about Central. We are obviously propelling it hard. The platforms are embracing it. We have at least 20 inquiries right now for people who want to integrate with the CAS.
Sure.
And a lot more is about to happen in the next 2 or 3 months.
Yeah, I just wanted to quickly add, and it's a very related point. Something happened over last weekend. On Friday, SEBI came out with account aggregator platforms authorization for FIU from mutual fund industry. So now there is another new layer coming up, and it will happen very soon for RIAs and banks and others who now can access not necessarily just mutual funds data, like what they're able to get through MF Central, but they can do it across the financial services. So one good news is that now you can actually go and get bank statement, bank data, credit data, and of course, the mutual fund and broking data, demat data in one single view when these APIs will be made available very soon to you.
That's true. We've been waiting for that, and we're very happy that it has come.
I think it's a matter of days now.
Exactly.
And I actually am working on that side to get that happen very quickly.
Excellent.
So I'll just add a bit there, sorry to interrupt. Like Shrima said, for account aggregators, you must have seen the headlines. The industry is talking about 110 crore linked accounts. The 13 crore MF folios will get linked very soon as the mutual funds get in. And SEBI, like you said, has just formally approved the architecture. The informal conversations happened about 2 or 3 months back. And then pension has now announced that they will get in some time. So as a wealth advisor, whoever is here, you can actually get a consent from your consumer that you will download the bank statement every week. Every day is also possible if you want to do that. And you can see the few lakh rupees which are only earning 3.5% taxable. And then you have the liquid plans and the fixed maturity and the standard maturity plans, and you can move money instantly. So for wealth management between MF Central and account aggregator, that's a big fillip coming your way very, very quickly.
I'd like to just add here that I don't think so many of the audience people and on the stage knows, but the largest money market fund was actually Alipay, right? The wallet of Alibaba, where they were just sweeping around that money from the wallet into a liquid fund. When account aggregation becomes a reality, and if we allow some kind of wallet or something, then I think the liquid fund, the money markets or the ultra short variety, I think that money from retail can be really, really huge. And for a bank like SBI or any big bank, a HDFC bank, the cost of that money, which was actually negligible on a savings account, can be routed through a mutual fund there, because
that's very interesting.
They are scrambling for deposits today, but it can come through here and then come to the CD of the bank. So the account aggregation can actually be very handy if the advisor is allowed to, with the consent of the investor, look at this. So on the point what Anuj mentioned is simplicity has a premium. So the more simple the data gets presented, generally distribution and advisors make the report so complex on the portfolio that it becomes a 40-page report. What is the client interested in? Knowing the XIRR and how much basis points have you outperformed the benchmark to?
I think fintech players are actually making a good...
Yeah, so simplicity definitely has a premium
simplicity, there. Yeah. Talking about these fintech players and other execution-only platforms, so recently SEBI has come out with a consultation paper saying that now these players can charge transaction fee. So far it has been dealt without any fee. We're also happy. So what is the best rate or the cost structure that you all think would benefit both investors as well as these fintech players for their own betterment?
I'll take that. East India Company started in India with distributing cigarettes freely to everyone, and then they came out with charging cigarettes. Nothing is free here, and advice definitely not. You have seen a lot of discount broking platforms which are at 0 fee or 20 rupees per transaction and all of that. And sir, I'll give you a very interesting statistics with the largest platform there online, and I'm not talking of Zerodha. Somebody came on CNBC and put an ad that in 1,000 rupees per year, we'll give you unlimited trades on equity for the entire year. And then I turned to a big discount broker. I called him since he is a friend. I said, boss, if this guy comes into the market, tera dhanda to band ho jayega. Now, you are doing at 20 rupees per trade, he is saying 1000 rupees for the entire year. He said, you have not understood the geography. He said, my client is a client sitting in Indore who wants to earn 50 rupees in a day from the stock market, pay me 20 rupees and 30 rupees he wants to have lunch. He said he will nowhere going to pay 1000 rupees for an entire year because that is instant gratification what he needs. On a fintech platform, we all say robo and robo advisory. In Indian parlance, robo stands for research online and buy offline. Right? So why do you require a dunzo? Do you really require 10-minute grocery in this country where the ambulance takes 1 hour to reach your house?
Then it's not a problem.
Yeah, we have 30 minutes pizza, 10-minute grocery, 1 hour for ambulance, and you want advice instantaneously. Why? Because the impatience in the investor mind is because I have to put a coin and I will get coffee from the vending machine. So everywhere we are expecting quick solutions. I don't think so over long periods of investing, you will require a quick fix. So fintechs, it is a convenience. What is going to drive? For advice, definitely you should pay. At the start itself, it should have not been free because once you give it out free, it is very difficult to charge the customer.
Yeah, I would like to add one thing to what he's saying, and he's absolutely right. Nothing comes for free. And when it is free, you really got to look at where is the cost coming, who is paying for it, and why is he paying. So that's the first chapter of economics. Coming back to that, this advisory being paid and all. What is happening is with mutual funds developing more and more, and all the products that we are talking, which are very convenient and pretty fancy, but they're also making products more complicated. So it's like, should I take a crocin or should I take that Coldarin kind of a medicine, which is a combined medicine? Who will tell the client? Initially, they go to the fintech platform, they buy it, and that's there in their portfolio. But after a few years, they don't know what to do about it. So advisory, we feel, will play a much bigger role in times to come because everyone is coming into the market, which is a great news. But more and more people coming, more and more products coming in, more complications, and without a client-side advisory, it will be very difficult for people to manage. So this whole asset allocation, tying the products with financial goals of a client, it will be the job of the intermediation, and that is what will push the growth of the industry.
I understand. Yeah, intermediation is definitely important. And AMFI, in its recent campaign also, that they wanted to promote distribution as a career, very interesting career and remunerative career. And they want to bring in more and more distributors to, rope in more number of investors into the mutual fund segment. So what is your view, Raga? How is going to change the equation?
I think the challenge for us as an industry is nothing but that we lack intermediation. And yes, there's a lot of fintech, there's a lot of direct DIY stuff, but I think like our panel has been talking since the last 30 minutes, it's largely become a personalized experience, and that you need intermediation. So, and I think the challenge for us is to convince somebody to become an entrepreneur, one, and I think this business takes a lot of time to build. So it's not something that you join today and within a year, 2 years, you make a lot of money. Sure. But it is like any other entrepreneurship. So I am personally very happy that we're doing it. I think it's early days yet. We have not seen any great numbers or anything. So I know you'll ask me for a number. You're very good at it. So Satya, we don't have a number to give you immediately, but yeah, I think the campaign has worked well. The other thing, of course, is the SEBI sandbox, which is the 5,000, MTs that we can take, trainees, and pay them a certain fixed remuneration. Now, this is a big, big change because SEBI in the past, as regulators have said, upfronts need to be prohibited. You can't pay somebody sort of a quasi-remuneration. And this is another big change, and the industry is going to do that. I think we already have. I think we will get into a pilot mode in the next 2-3 months. So I think these are brilliant initiatives, and I think we need more.
Sure. Amit, I'm sure you must be having some thoughts on this because you've been in this industry.
As Raga was mentioning, the biggest successful NBFC over the last 10 years, what we have seen is Bajaj Finance, right? They have been scaling their business very well. How do they scale it? With the help of AI. If you put a PAN card for a loan application online, they just see whether Amit is actually using a spectacle on the photo, and next time a Lenskart ad is pushed when you're logging into the system, right? Why I'm saying this, Raghav, is because all of this is there with Bajaj Finance, but they require people as touch points for closing the loan agreement. So you can do wonders in AI, you can do wonders in fintech. If we don't have that 5,000 MTs going to 50,000 MTs, or if we don't have 5 lakh more people joining every year, somebody in Thrissur will not be able to put money in a mutual fund. He might have the access through the app, but he will not understand it put money. He will just put it based on whatever the league tables are showing, either in the newspaper or on the TV channel.
Sure, sure.
Yeah, I mean, I kind of agree on this consensus here. There's definitely a dire need for adding more MFDs in the market. Just look at the sheer numbers, right? So, insurance have about 24 lakh agents. 13, 14 lakhs of that comes from the LIC itself. In 2021, they added 1.3 lakh new agents, 1.7 lakh new agents. Mutual fund industry has only 1.7 lakh new agents, right? Even if you add all the UINs, we are at about 2 lakh plus, including all the last mile selling, and if you add the RIAs, it's another few thousands. What are we talking? We are talking about only 1% penetration. 13.4 crore folios, we are very happy, but the real plans are about 3 crores, close to 3 crores. So it's a long rope for us to attend, and without the Kare Shuru campaigns or things like that, it's not going to happen. Whatever, we may say anything about the fintech, and obviously we need all that, but we also need a big revolution in more and more number of people coming and experiencing mutual funds and getting invested, but of course, with the right set of advice, otherwise their experience is going to be,
Yeah, I remember talking to one of the successful fintech players, and he was saying that after investing a lot on the fintech space and AI and understanding the software and the technology behind it, he said that he finally realized that having a human touch point is very, very important. That's nice.
You're parting with your money, you just can't, and it can't be, you're not buying a ticket.
Yes. Anuj, do you have any statistics, or do you want to comment, how this mutual fund, distribution business is going to change in the near future?
Yes, I think, like has been said by the panel, there is broad consensus. I think there is a set of do-it-yourself people out there who try to do everything on a 6-inch screen. They will continue to do that. They will be self-seekers, they will make mistakes. And it's not just the number that we see in our industry. I mean, if you see the 2 crore demat accounts each opened in 2020 and 2021, those are exactly the people who said we don't need any advice. We are not going to follow Darwinian evolution. We will not get into bank deposits and then mutual funds and direct equity and FNO and then crypto. They landed at crypto straight. How many of them burn their fingers? How many of them are long-term fatalities? I don't know, but a lot of them will never return to the market. So I think it is clear that jumping that cycle is not easy. The machines can do transactions very easily. They can give you the information very easily. But there has to be sage advice, and more than sage advice, I think there is an emotional hand-holding part of it, which is very, very essential. It's like your doctor. You don't like to do those video calls. You have to be there in person.
Right.
And after you shaken hands and met them, I think the experience is very different. The industry has been debating this for many years, but I guess the way I would conclude is that yes, the platforms will kind of proliferate and will do what they have to do. But a lot of relationship management, emotional handholding, deal closure, and getting the uninitiated into mutual funds for the first time will have to be done by people.
Great. So just last one question, since the theme of today's mutual fund conclave is how mutual funds is going to help people to build wealth in this decade. So what is that one thing that you think will drive mutual fund industry in the next few years? Maybe we'll start with you, Raghav.
Reverse flow that you caught me again. I thought you were going to go with Amit, so I thought I'll say I agree with whatever he said.
That's why I did this.
That's the easy one, right? Of course. So no. I think the biggest challenge for us is to grow the number of MFDs or distributors, intermediation, in whichever form. I think that's the big one for us in terms of how to grow this piece. I think the visibility, the pull factor, like when I came into the industry 20 years back, I had The moment I said I was from a mutual fund, I was not given an appointment. In many cases, because mutual funds in early parts of their life destroyed wealth. Nobody likes losing money. Right? I don't think that problem exists anymore. I think if you take a poll, people in this room, 20 to 30s, just starting their job, I don't think you will find any resistance to putting money in a mutual fund. I think the challenge is to make sure that that person, that investor, has a good investment experience so he continues with that journey. I'm worried about breaks in journey, and that break will stop only if there are more people in the industry. So for me, that's the big focal point. Of course, you can add all the other bells and whistles, the technology, the number of investors, all that is secondary, but that number of partners is very, very important right now. Yeah.
Sure, sure. Renu, I'm sure that you were going to say that RAs are the most important intermediaries.
So maybe I have that bias that I think a fiduciary advisory is what will drive the industry. The biggest bottleneck, what we are all talking about, how many are there in the country? So you said few thousands. Actually, the data is quite startling. We had only 1,300 registrations with SEBI. And the second part, that is, everyone needs to get registered with BASL. That data is only 700 odd. Where are the 600 other? And we are talking a country of 130 crore people. So this is, in my mind, the big problem is not where RIA will get the business from or whether RIAs have a business or not. The big problem, are there enough RIAs or not, or are there enough intermediation or not? So I know these are very big things to talk about and think about, but everyone in the industry is over here. Should we not be looking at that we take this to the school and college level as an awareness program, that this is where the careers will be made in future? This is the fastest growing industry and everyone is running about some degrees which have got no value and doesn't really offer them jobs. So this is my proposal, or if someone asks me what should be done, I think the industry should join hands, reach out to schools, colleges, educational institutes, incorporate this as a career program. Every MBA institute should have wealth management as a option. Every college should be looking at it. And that's the only way that this industry will have enough personal people taking up this profession and driving it up.
Food to thought. Anuj?
Yeah. No, I mean, I'm going to be repeating the point, but I'll bring another perspective. I think what Mutual Funds IEA did in terms of building awareness, our Courage Shuru, Mutual Fund Shuru, is what is going to be creating that awareness of bringing MFDs, RIAs to the market, and hopefully there'll be a decadal change. Recently, we were having a conversation internally, and we had this whole, Azadi Ka Amrit Mahotsav, and we did this whole thing about Har Ghar Janda, Har Ghar Tiranga. We said, why not Har Ghar mutual funds? We have 350 million households in India, and why not think about such ambitious, audacious goals or make that happen? Education is one, distribution is another one. So we got to make both of this work together. At SBI Mutual Funds, we've always had this whole, we want to be the capital market provider for every Indian, smallest and the biggest. If you have such audacious goal, if you are going to create that kind of a vision, then it's only going to happen. If this decade is going to be about wealth creation through mutual funds, then this ambition is important. Somebody talked about building from 38 lakh crores to 100 crores, 100 lakh crores. And I think that's the vision of AMFI and everyone else. It's not going to happen with very incremental growth of whatever we are having, 20-25%. You really need to jumpstart that, and bringing that whole bottom of the pyramid guys in a right way, with a right product, giving them the experience of creating wealth. That's very critical.
Right. Mitch.
I have a slightly different perspective, and the way I would think about this is, when I look at myself as an investor and the industry about 6 years back, so not too short a time, not too long a time, but my oldest ELSS folio is perhaps 1998. When I open that in CAMS Online, I see a 16% return in 24 years. If I see, and I'm largely a large cap investor, again, 15, 16%, those were the days. It must have delivered 16% when PPF was 13. PPF was perhaps 7 and some change. We know everything else. I think our communication is very cluttered today, even for an existing investor, because we give so many choices and just so many options that the guy perhaps believes that he's bewildered completely or doesn't know where to put his finger. My thought is simple, that here is a large cap fund manager, there are probably 20, 30, 40 stars like that in the industry. And if in 20 years they've been producing 15% return consistently year after year, you can go and get that money back at a day or two's notice. Well, that's the compelling pull, that it's a single line, and to your point, there is merit in simplicity, because somebody who's uninitiated, when he starts looking at the bewildering choice that we offer, perhaps gets confused and defers the decision. So that's what I think is perhaps an important thing.
Sure.
Yeah, 3 points actually. Why do we say that we have lesser civic sense? Because civics as a subject is only 20 marks in our curriculum. Why do we say that? Investors, there are only 3 crore unique PANs out of 130 crore, because compounding as a question in the maths paper is only for 3 marks. We don't discuss compounding, we don't discuss it in the house. Third important point is, and Raghav, don't take it otherwise, or Jain Saab, what I have been looking at in the last 22 years in the industry is that we design a product and then we write a narrative on that product. What is actually needed is you write a narrative and the fallout of that narrative should be some product. So if value investing is the narrative, asset allocation or a value discovery or something else can be the product. The industry is exactly doing the reverse. We are designing the product and then we are preparing marketing literature on that product as a narrative. I think that is something what needs to change in the industry. And last but not the least, I think as an industry, what we should actually look at is, can, instead of having cricketers marketing mutual funds, we'll have some investors who have stayed with the funds for 25 years. Can those live stories be actually shared? I mean, we don't require celebrities to come, because then you will have Coin DCX also, which is endorsed by a celebrity. You have Wald also, which is endorsed by a celebrity. I want live heroes. I want heroes who have actually achieved it. It's very easy to forward Warren Buffett quotes. But you have some investors, like I have some investors who have stayed for 20 years and got 16%, 18% compounding. Serious money. I think Neil was mentioning about some investors he wants to cover on serious money being made by staying invested over a course period. So I think Raghav, you might take up in Amphi on this as to, if we find, and across mutual funds there will be investors, because they must have lost the first account statement, they have stayed for 25 years and got the compounding, but you should find such investors. Thank you.
I'm sure Srinivas and Raghav will be having their own points on that the product should be built based on narrative and not the otherwise, but not, let's not get into that. If we have some time, we can take some questions.
Sure. All right, so please go ahead.
Hello, ma'am. My question is to you. So, as you say that there are around 1,200 registered investment advisors, and with BASL it is somewhere around 700. What do you think is the reason? And as I also work with an RIA firm, so what we seen is the regulatory pressure is a little too much, and the guidelines which we need to follow are a little too rigid, I would say. So, what is your take on this?
See, and I would like to say this is not exactly Arya's position. This is also personally my position, very much my position. I'm a 100% fiduciary with no commission income in my business model. So I can say this with comfort, that yes, the regulations are rigid. I don't disagree with that. The driving factor was something else which we all know, not the forum to talk about. But at the same time, if the model is clean for any RIA for that matter, that means they are actually working on the client side in a fiduciary manner with no commissions and keeping all the things straight. You know, simple things that are taught in any course. You know, keep your communication clean. You know, put things in writing, in right perspective. Set the processes. If that is there, the compliance, as rigid as it may look, falls in place automatically. So, personally, my view is that regulator was ready and brought out these regulations, but the industry, intermediate industry was on the distribution side, and like Amit also mentioned that once everyone started getting it for free, no one wants to pay for it. But somewhere we will have to do that introspection as well. I do agree there is rigid regulation, but we also need to understand that investor has to be protected at any cost. Now the small investor has moved into the industry. Any small bad experience will drive this whole generation out of the market, and regulator has a job to do, so I wouldn't say about that. RIAs will happen if investors start asking for fiduciary. And once the investor asks for that, I'm sure everyone will move in that direction. So that would be my position. I hope you got your answer.
Thank you all. We hope that you found this session informative and interesting. That's all from our side. Thank you. Thank you all. Thanks for the answers.
Thank you, Satya. Thank you so much for asking some of the burning questions we have on our minds. I'm going to request you all to please come together so that we could quickly capture this moment. Photographer Sahab. Let's do this. Meanwhile, I want to